Taking a look at the China effect, Sherry, when it comes to the trading that we're seeing across Aussie miners. Of course, we had the jump when it comes to iron ore prices, the reaction to the upside when it comes to copper prices as well.
Just as Australia's mining industry was getting used to a bleaker outlook for iron ore, China's massive blitz of economic stimulus has sent the price of the steelmaking commodity soaring. Meanwhile, M&A talks are popping up again. But haven't we been here before? Hello, I'm Rebecca Jones and welcome to the Bloomberg Australia podcast. Today on the show, we take a look at why the shares of some of our biggest mining companies have been bouncing back lately and what these companies are doing to get the commodities they want and need for the years ahead. Paul Hunt writes about mining for Bloomberg and he's based, like me, here in Melbourne. Paul, I heard a rumour that rocks are more than just a day job for you. Please explain.
Hi, Beck. Yes, I am a collector of fossils and mineral specimens.
And since joining Bloomberg just a couple of months ago, you brought these over from your native WA to your new home here in Melbourne.
Nearly 20,000 pieces.
No way. Well, that's one way to test the thresholds of domestic baggage allowance. Paul, it's great to have you on. The big headline lately we've seen is China announcing a raft of stimulus measures to try and boost its economy, and that's resulted in a jump in the price of iron ore, right? Iron ore being a key ingredient of the steel that's literally helped build Chinese homes for the past 2 decades. Now, that jump has given a boost to our biggest ASX-listed miners. It has come off a bit this week as this excitement around the stimulus peters off. But tell me, Paul, what else has been happening in the industry?
There's a hive of activity underway at the moment. So we've got everything from mergers and acquisitions to signs that the lithium market might have bottomed out to iron ore demand. I mean, China stimulus, China. We've also got gold hitting more records. You name it, something is happening in the mining space at the moment.
And of course, nearly all Australians own the likes of BHP, Rio and Fortescue, if not directly, then through their superannuation. Paul, how has the share price of these big players reacted to the recent China stimulus?
So over recent weeks, they did jump up a little bit. But if we look at the three big ones, the three big iron ore players, BHP, Rio and FMG have actually fallen over since the start of the year. That's been in line with sort of the fall in iron ore prices recently. Last month, when iron ore fell to its lowest level since 2022, the mining companies reached 12-month lows too. So there's this really close connection between the iron ore price and the iron ore miners and producers.
Who doesn't know the iron ore price is going down and is likely to stay there for an unknown but lengthy period? What does this mean for our golden goose?
And that was mining billionaire Gina Rinehart backing up what Paul's just said here. She was talking just over a month ago on these falling iron ore prices. And Paul, what's the story? Is this thing, what we're seeing now, is this an actual comeback for iron ore, or is it more of a false dawn as we've seen before?
All the analysts I've talked to at the moment believe the latter. The iron ore price is going to fall, and there's no ifs or buts about it. And part of that is because China is starting to plateau. That's because China has enough steel. It's reached that position in its national growth where it doesn't need as much steel anymore. In the future, there will be more demand from, say, India, another developing economy, but it's not going to be the 30-year boom that we have had, this once-in-a-generational mining boom.
So, Paul, where are the analysts telling you that these big mining companies are looking to next?
Well, for BHP, it is copper. It's a big bet on copper for BHP. Earlier this year, they attempted a takeover of Anglo American, which has a really enviable copper portfolio. If it had managed to get that over the line.
To
It would have been
succeed,
the
right?
biggest biggest copper producer in the world. And it's also made some smaller acquisitions. And then, of course, it's still developing and still exploring for new copper mines too. South 32 is doing the same. It's exploring for copper. Whereas Rio Tinto, it's all about lithium.
Just this week, right, we saw they made an approach to Arcadium lithium.
Yeah.
Tell me about that.
So if we take a look at lithium prices at the moment, they have been in the doldrums for the better part of a year.
Is that softening demand for EV batteries?
Yeah, it's partly that, and oversupply.
Right.
But miners are betting on a second wind for lithium in the coming 12 months. There's talk that lithium prices have reached the bottom and there's no way further down. It's all upwards from here. So that's why Rio's moved so quickly this month to announce that it was attempting a takeover of Arcadium. But whether or not they can get Arcadium at a suitable price, given that keeping in mind that stock prices are always connected to the commodity price, and at the moment commodity prices are so low for lithium, will they offer a realistic premium and get it over the line?
And what's the street telling you that there's more to come on the horizon for these sizable deals?
Well, they need growth options.
Yeah.
Industry at the moment is looking at the energy transition. They're seeing so much opportunity in critical minerals, from lithium through to copper and even potash, which is a fertilizer.
So the analysts are telling you the subtext here is strap in, because we're in for a bit of a ride, a wild one.
This year is shaping up to be one of the most frenzied years in the mining sector. I mean, we're seeing these multi-billion-dollar deals coming forward, and we're also seeing companies really having to look at their plans. You know, are they going to build new mines or are they going to buy new mines?
And let's take a closer look at that when we come back.
We're one of the world's largest copper producers already. We have the world's largest resource position in copper, and we see this as an attractive commodity longer term because the demand fundamentals are so strong. As the world's population continues to grow, as it urbanizes further, standards of living rise, and the energy transition unfolds, those are all copper intensive.
Welcome back to the Bloomberg Australia podcast. I'm Rebecca Jones, here with Paul Hunt, mining reporter for Bloomberg. We just heard there from Mike Henry, the CEO of BHP, who's pretty positive on copper. Paul, I know you've been travelling a lot for your job in the past 6 months to places I've never heard of, and, you know, until I see them popping up on your expense reports. What are you seeing out there on the ground about what these big miners are doing to diversify?
Well, let's take a look at copper. I mean, copper is the big bet for BHP. It is investing a lot in both M&A, but also in building mines. So we're talking exploring, drilling holes, trying to find the next copper deposits. And I went to Oak Dam in South Australia's massive copper belt.
That was last month, or?
That was last month.
Yeah.
And went and visited their Oak Dam deposit where they're still drilling it out. But the interesting thing about that deposit is that the ore body is kilometres deep. It's 2.2 kilometres deep at its deepest point.
Did you go down 2.2 kilometres, or haven't built it yet?
That mine hasn't been built yet, but it was incredible to see the shape of the deposit from computer imaging and talking to the geologists there, because one of the big challenges will be, how do you mine at 2.2 kilometres?
I don't know. How do you mine at 2.2 kilometres?
With incredible difficulty and potentially without human beings. At those depths, it becomes really hard to build a mine, really hard for people to go underground 2.2 kilometres. I mean, just the heat and the operations down there. So when you take that into consideration, this is going to be a massive project for BHP and potentially involve a lot of autonomous machinery.
Are you telling me that BHP is looking into M&A in the tech space? I don't know. Is it such a long road before things like space mining are not considered just futuristic sci-fi dreams, or, you know, at least the tech behind it? Because mining on Earth sounds like it's getting to be just as hard.
I don't think BHP has any interest in, you know, mining the moon or going out there, but it is interested in the technology that could be used to do that for these deposits, which are getting harder and harder to find. So Oak Dam, you're talking 400 metres depth before the deposit starts, all the way 2.2 kilometres underground. That's going to involve autonomous machinery. It's going to the future of mines are becoming harder to build and relying on more technology.
It's a fantastic idea, and I would love to be in the audience of their AGM when they're explaining why they decided to get into space mining, if that was to ever happen. But it's a great example, though. Is there other examples of these big mining companies buying rather than digging themselves? Are they approaching it that way also?
Yeah, so the BHP's big bet on copper involved Anglo American this year. It made a whopping $49 billion blockbuster takeover attempt of Anglo for its enviable copper portfolio.
But it wasn't enough, right? That didn't
wasn't
go through.
enough. Yeah. No. There needs to be a balance between buying assets from other companies and building your own assets. So a prime example of that is while BHP went for Anglo American with that $49 billion blockbuster a deal earlier this year that didn't go through, it did also acquire some exploration tenements that are some 5 kilometres or 4 kilometres up above sea level in South America. Now, to mine something up there is going to be extremely difficult. Again, it's almost the opposite of Oak Dam, where Oak Dam's really deep, but this one's really high in the sky.
How do you get people up there? Like by chopper or what?
Well, the weird thing is that helicopters at that sort of height, the air is so thin that they struggle to hover.
Gosh, I'm trying to think of which is a better problem to have, the problem of going too deep or too high.
I mean, that's one long escalator, right?
It certainly is. So, Paul, what else should we be on the lookout for next from these big companies? What's on the horizon?
I think lithium, in terms of M&A, is going to remain really relevant over the coming months. There's a lot of noise as well that lithium has sort of bottomed out. There's no way to go but up for lithium prices. Then there's noise about uranium stocks and rare earths. There's a lot of natural room for consolidation.
So diversity is very much a part of the main game for Australia's biggest mining companies.
Absolutely. Companies really need to think through their strategies, and diversification may not always be great, but the big guys certainly think that's the way of the future.
Paul, lastly, just out of interest, where do you store your lump of iron ore?
It is in a glass. It's magnetite type of iron ore, and it sits in a glass shelf in my bedroom.
Well, I think after the last 15 minutes, hearing about the enduring nature and the high price of iron ore at the moment, you best be off to Bunnings on the weekend to get a nice home safe for that one.
Well, it is quite heavy. I'd probably rather it was gold.
Thank you very much for joining me today, Paul, and thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Chris Burke. Don't forget to follow and review the show wherever you get your podcasts and sign up to Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.